What up? What up? It's your boy Nate back with another one. But in this video, it's going to be a little different. I usually give you guys two stock picks and a crypto update, but this video is about me telling you guys more about myself. It's important to me that you guys understand who I am. So, before we jump into that, I'm going to tell you about my current life, my future goals, how I'm choosing to invest. But first, a disclaimer. The usual disclaimer that, we got to give every video, but I am not a financial advisor. This is for entertainment purposes only. Investing carries risks. Talk to a licensed financial advisor in your area. Always do your own research. This is simply my research. Past performance is not indicative of future results. And most importantly, I am not trying to sell you anything. All right, let's get into it. As you all know by now, I'm Nate. I'm a Michigan resident. I'm 33 years old, and I'm a construction worker for the biggest company in the state of Michigan, biggest construction company in the state of Michigan. Won't give them a shout out because, it just won't do that. But anywho, I'm a median salary employee, so managing spending is important. I'm a first time homeowner as of January this year. And honestly, guys, I live a basic life. I work, hit the gym, spend time with my lady, and sleep. That's literally like my 24/7 right there. I mean, that's my everyday. There's nothing too special going on. I mean, that time, is special, but I'm not doing anything that most of you aren't doing. I'm living a normal lifestyle. So, to speak a little bit more about work, my job offers benefits and retirement. And I was actually introduced to investing from a guy I was working with. I'm someone who, when I thought about life 30 years from now, I only consider my pension, annuity, and Social Security. Like I was planning for, 60 years old, like 62 years old. That's like, oh, that'll be my life at this point. But he explained to me that none of that stuff is promised. So I should start saving for myself. But to do so by using uh, 10% of my weekly check. I'm trying to, it's going to come to me as like, this was all months ago. And I've grown so far from that time. And, some stuff I was able to write down and some stuff, it comes to me and it goes. But he told me that investing 10% weekly into the stock market, so my money could grow with the economy. So I never had anyone tell me about this. So hearing it from someone established who could show me exactly what he meant by investing, even providing peeks into his Robinhood account, I was mind blown. 60 grand in the S&P 500, 20 grand in Bitcoin, and 20 grand in the Nasdaq. He will have no financial issues after retirement. So I was inspired. So much so that I want to share with you all my journey. So I started investing October 3rd of this year, a Friday to be exact, 2 hours before the market closed. I'll never forget it. I invested my first $100. Clueless what to invest in because you always want to learn what to invest in on your own because, again, investing carries risk. So, of course, I picked all companies I knew were big, the usual Apple, Tesla, Microsoft, Pepsi, Ford, just to name a few. Then I realized I bought into 36 stocks at $2.50 a piece. Clueless what I'd done. I gave it a week. Some stocks I was earning pennies, some dollars, and some losing tremendously. That's when I decided to learn the stock market. I watched, no lie, like 420 hours of video in a month. That's 14 hours a day. Listening and watching. If I wasn't able to peek at my phone, it was playing through my headset. I listened to guys like Wall Street Trapper, Keenan Grace, Chris Sane, Mark Tilbury, Humphrey Yang. And that's just to name a couple of the people that I was able to learn from. Because I subscribed to like 25 different investing YouTube pages. I joined investing threads on X. I joined groups for investing on Facebook and WhatsApp. I was completely locked in. So after I sold all those stock, my $100 now $89. So not terrible, but a lesson I learned. I also decided to switch brokers and I'll tell you all about that journey. One second, I just got to pull up my Robinhood account. So I switched brokers. Originally, I had Fidelity, which I should have mentioned that, first. But I had Fidelity when I first started. Just history of hearing about Fidelity. I was like, oh, this must be where I should go. And when I got on Fidelity, it was kind of difficult to use. Um, it didn't fit for how I envisioned you know investing. It's a lot harder to use than Robinhood. The interface is a lot easier to use on Robinhood. So I transferred my account and had no idea it's a fee to transfer. So now my $89 is now $54. And it took a week to transfer over the funds because they had to sell the one stock that I was investing in at that time. That was the last stock that I decided to keep. They had to sell that one to transfer over to Robinhood. So now I had a game plan from all that I had learned. And that's when I decided what I wanted to do. And I call it the 10, 20, 30. 10 represents the next 10 years of my life. I can take a little bit of risk. I'm 33 years old. Work is flowing. I still have some of my youth. Again, I'm late to I consider myself late to investing. I wish I would have started at 20 years old. So I always tell myself that I'm 13 years late. Am I late? No. You can start investing in your 30s, start investing in your 40s, start investing in your 50s if you want to. It's just more money that you have to, spend. So I wish I could have started in my 20s. So I came up with this 10, 20, 30 plan. Again, the 10 that represents the next 10 years of my life. I can take more risks. And what I do with that 10, I invest that in my individual account. When I give you guys the 2 stock picks for the week or daily, sometimes if I can give that to you, those all go to my individual account. So I'll share with you a couple stocks that I have in that individual account. And they are stocks that I've been giving you guys, over the past 2 weeks. So I got Robinhood, I got APOD, I got Palantir, I got Lyft, SoFi, Ondas, Credo Technology. So I also have 2 ETFs, and they're pivotal for this individual account because with those, I think that I'll probably gain more through the individual stocks, but with QQQ and VTI, QQQ is the Nasdaq, the VTI is the S&P, but it's like a total world stock. So those are like a security blanket to the individual stocks. So I haven't had much volatility, luckily, within my individual account, but I kind of look at QQQ and VTI to somewhat get me out of the red when other individual stocks are down. So that represents the 10. Now the 20, that represents the next 20 years of my life, in which I set up a managed account through Robinhood. Robinhood offers a managed account where you invest the money and an accountant through Robinhood, they will do the investing for you. So some people aren't for it. I might change my mind later, who knows? But as of right now, I like it. It's a professional making the moves for me at a low rate. It's kind of hard to not give it a chance. Does it cost a little bit of money in the long run? When you made some money, they'll get a percentage, but it's like a couple of dollars. When I say a couple of dollars, if that thing turned into 20, they probably take 200. If that turned into 20,000, they might take $200. I'm okay with that. Really, I'm okay with that. So, and with those funds, the goal, if I was to make some money on that the 20-year plan, the goal is to pay off any debt I have left. As I'm easing closer to retirement, I want to pay off what I can. And I'll share with you a couple of the stock that's inside the managed account that they're managing for me. So, how they build out the portfolio, you got your US stocks, large cap, momentum, value, mid cap, and quality. Then you also got your US bonds, treasury bills. And you got your international stock, emerging markets, Europe, Japan, and they put aside cash for you. So what they do is they roll with ETFs. They invested they invested in iShares IVV S&P 500 ETF. They invested in the Vanguard Russell 1000 Growth ETF, the Invesco S&P 500 Momentum ETF SPMO, Vanguard Value ETF VTV, iShares Core S&P Mid Cap ETF IJH, and State Street SPDR S&P Aerospace and Defense ETF XAR. And it's all by a percentage. The allocation is, it's all split. So they monitor it. So if something's going down, they'll throw that money elsewhere where the money is growing. I have not lost a dime in this managed account. So, you got your large cap with the IVV, your growth with the VONG, the Vanguard Russell 1000, VONG, momentum, it's an asset, Invesco SP 500, SPMO. And I won't go over them all over for you again, but just rewind if you want to catch on to that. But that's a managed account, So for those listening, again, investing carries risk. But if you want to copy those, go for it. You're getting the portfolio from a managed account without having to pay for it. So, I mean, go for it. I would say go for it. So again, I'm using that to pay off debt. You see, now that the 30, so yeah, sorry about that. The 30, it's the 10, 20, 30. That 10, that first 10, that's me investing, doing a little bit of trading, taking it. It's a gamble for me, it shouldn't be gambling, it's investing, but I'm going to lose. I'm going to win and I'm going to lose. I know this, but I got to take these chances while I can. The 20, that represents a managed account for me. I pray that it'll grow. And if it grows, that money will help pay off any debt that I may have at that time, leading on to the 30, which is the most important to me. And the 30, that represents my Roth IRA, the money that won't be taxed after 59 and a half years old. Those many years of investing and compounding over decades, that money will turn me into a retired millionaire. So now I'll share with you guys my investing strategy, also my portfolio. So in my individual, I currently hold share stocks. Some of these hold and some I'll sell. This is slightly research and risk. This is picking those stocks you believe in. Now my managed account, I don't mind sharing those stocks. I just shared those stocks with you. I think these will work, but it's just the job to make it. It's their job to make the adjustments. Again, I'm just gonna pray about it with that with the the managed portfolio. I'm just gonna pray about that when I'm hoping for the best. Now my Roth, which is my research, that's what I learned, and I decided to play it safe. What I decided to roll with in my Roth, chose all ETFs. ETFs are exchange traded funds. It's simply a basket of stocks at one price, but by percentage, just like how that managed account, it's all percentage based. So, with that, I understand that it has to have the time to grow and expand, but it's much easier to sleep at night knowing, you're not taking much risk. So I will say with the ETF process, you're definitely going to want growth, income, stability, and diversification. I dollar cost average into all these stocks by because I don't want to deal with much volatility. So I don't want to just go all in and buy one share of a stock. I want to $10 here, $10 here, stuff like that. I don't want to go all in. You pay it while it's high, then it drops down. Then, I could have saved so much money. You can't really time the market, but it's better to just pieces at a time. You do for those who can, by all means, buy that full stock. You know, it may average out at some point, but for me, bank account just ain't set up like that just yet. So I'm gonna take my time. So I dollar cost average, like I said. So one of the stocks I have is VOO. VOO is the S&P 500. I have that stock. It's broad market. That's my broad market ETF. Then I also have SCHD, and that's for dividends. So with SCHD, for those who don't know what SCHD is, it tracks market cap weighted index of 100 dividend paying US equities. So within that fund, you got Merck, AbbVie, Cisco, Coca-Cola, Pepsi, Chevron, Verizon, just to name a few. You know, when they make their money, they'll pay back out to those invested in them. Then with that money, you want to do what's called the drip, where that money is being reinvested right back into the stock. I don't want any of that money right now. I want that money to keep going, going, and going. So when that money is sent back to me, when my percentage of the money is sent back to me, I just reinvest it. I don't want to see it until 59 and a half, unless I absolutely have to pull this money out. And I'm God, Lord's willing, I don't have to do so. And another one, so I also have QQQM, and that's my high growth ETF. All right. That's high growth tech exposure. And within that one, that's where you got your Nvidia, Apple, Microsoft, Broadcom, Amazon, Google, Tesla, Meta, Netflix, all tech. So a lot of volatility within QQQ and QQQM, but the man, the pay you'll get your money back as long as you keep investing, don't pull from it. It's going to always, it beats the S&P 500. But the S&P 500 is still the safe route. Okay. And I also have VNQ. That's my real estate exposure. So funny thing about VNQ is I had it a month and a half ago. Then I sold it because I started thinking about the market. And I was like, man, do I really want to invest in real estate with high interest rates? And, not many people are buying homes. But I started to see this thing go up, and go up. And I was like, why did I sell? I actually lost money when I sold it because I bought it at a higher rate than it was. And right after I sold it, I'm talking the day that I sold it, it went up $4. I know you're thinking, oh, it's just $4. Yes. But as I'm paying into this, it would have been more shares. So that it would have been 4 times however many shares I had. And I gave up on it. And I recently repurchased it for a higher amount, but I believe in it because I saw that it will grow. So I reinvested in VNQ. Again, that's real estate exposure. And I also have gold. That's my inflation hedge. When things go up, when things start to go down, like if the stock market starts to crash or go down a little bit, gold usually goes up. Gold is safe. It's like the safety net for investing long term. So that's why I invest in gold. And that ticker symbol is GLD. It's my inflation hedge there. Also invest in SMH because it powers tech and AI, and I know it's necessary for the future. The production that we will see every day in everything is ran off semiconductors. And I'll get into that too here in a little bit because I have a story to tell. So I once owned a share of VXUS. I might repurchase it. Same situation with the VNQ. I had them at the same time and I sold them the same day. I had VXUS. It covers the global stock market outside the US. So I sold it because SMH holds the huge stocks within VXUS. And I'll share those with you. So VXUS and SMH, they both hold Taiwan Semiconductor. They both hold AMD. they both hold ASML. Those three are huge holdings within SMH and huge holdings within VXUS. So I didn't find it necessary. But then it hit me. I should have held on to it because a huge company overseas somewhere could grow into something huge. And I robbed myself from it. Let's say it's not a semiconductor, but it's a huge company overseas. I just took that away for no reason. So I'll probably purchase a share, to start off with. And again, dollar cost average this thing. $10 here, $10 there. And I'm gonna have 15 years of compounding. So who is to say this company that I'm thinking of may not come many years down the road? I'm hoping for it, and I'll have it in my portfolio, so I'll be ready. So that's the goal with that. I also had a bond ETF, ticker symbol BND. It's also a security blanket when the market is underperforming. But again, I'm in my early stages of investing. There's going to be a lot of risk. I'll probably add a bond 10 years from now. An advisor actually helped me make that decision, because I was unsure. I was unsure if I needed bonds. And it's really for like the later investors, someone who they're really, really, really trying to protect their money. And another reason why I got rid of the bond is because in my managed account, there's bonds in there. So I don't know if I need bonds for every account that I have. So maybe when the 10's done, the 10-year investing plan, you know, maybe I'll think of a bond then. And maybe when the 20's done, I would have had a bond in that account in the Roth for 10 years. So then when the bond is done in that 20 and I pull that money there, I'll just reinvest that bond money from there into the 30-year plan. That's the goal. So, like I was telling you guys, I'm new to investing. I only been investing a couple months. I'm now at $2,500 invested. Not a lot, not a little, but it's a good start. It's for a couple of months. The goal is $100,000. I want to invest $100,000 into that Roth IRA. And the plan for me is 15 years max. $100,000 saved in 15 years. That is the goal. I think I can do it. Better yet, I'm going to do it. And I'm going to do it because I understand my early sacrifice will lead to later happiness. And I don't know about y'all, but I think that's worth investing in. So, with that being said, peace.